How's it going? It's Rocky. Welcome to our week 3 of our $2,000 weekly challenge. The $2,000 weekly challenge is us essentially trading the micro E-mini futures with a goal of a net profit of $2,000 every week. Thankfully this week, we did meet our goal of earning at least $2,000 of trading the micro E-mini futures. However, for this week, I'm putting a bit of an asterisk to it, and I'll tell you more about it as I show you the examples and what actually went on. I want to say for this week, we started the week well. We met our goal financially. However, some of the trades that I did to end the week wasn't something I'm very proud of. And also, most of our gain is actually not from the futures, and I will show you exactly what I mean by that. So this is how we did for the week number 3. We have a net profit to end the week at $3,706.70. That consisted of 3 green days and 2 red days. As I mentioned earlier, we did not end the week very strong. We actually could have ended our trading on Wednesday, and we would have ended the week at $5,010.69. But as with every trading, you can't expect every day to be green. What you can do is just learn from it and try not to do it in the future. Alright, so let's do our account statement review right now. As I had mentioned here, we ended the week at $10,291.06. And we started the week at $7,584.36, as you can see from the first episode of this week's series. However, we did withdraw money in the middle of the week, which is something I like to do, just to make sure it goes to my bank account, and it's a good practice to have. I withdrew $1,000 on January 19th, as you can see from this line item here. So instead of starting from $7,584.36, I'm actually going to subtract $1,000 from that. So our starting was $7,084.36. However, we withdrew $1,000. And that's how we came up with the net profit of $3,706.70 for the week. Now my goal to you is to show how we ended the week really bad. So even though I was happy with our gain, I wasn't quite happy of how we gave back so much of it to the market and how we weren't trading properly towards the end of that. I think that's a bit of the psychological challenge that I need to really work with myself, is sometimes when you have a bit of a gain, you turn to bring the emotions back and you ended up making actions that I wouldn't say is responsible. And one of that started on my trade here on Tuesday evening. If you're new to watching my content, what I like to show here are 2 different screens. We have the time chart on the left and a tick chart on the right. So on the left, basically these are 5-minute candles. So for every candle, it represents 5 minutes. And on the right are 512 ticks. So for every candle that you see, it's 512 trades. And that's something I'll do a little different also on the tick chart, is that I use what you call Heiken Ashi. Please look it up. Some traders like it, some don't, but for me, it works well for me for my tick chart itself. So what I like to do is I denote my start and end of a trade by drawing a vertical line. And the reason I do that is if I ever made a mistake, which I show an oval line here, I want to be able to see exactly why I entered, and by drawing a vertical line, I can then zoom in, like what I'm doing to the left right now, and I can essentially see how the MACD and the RSI is doing. So I can ask myself, alright, did we do a good entry? And for this specific trade, we shorted 4 contracts at 30,830. And just to help it visually, I'm just going to draw a horizontal line on 30,830. So we can see how that trade actually went. So that's the white line there. And the reason we entered was First of all, I always look at the candles first, their lower lows. And if you look at the MACD, this line had just crossed over here, which is an entry for me to short a contract. And it's corresponding to the stochastic RSI also, which was on the oversold area. So that's on the time chart itself. And now let's zoom in on the tick chart. So on the tick chart itself, as you can see here, the crossover actually occurred a lot earlier. So the crossover here occurred at 5:08 p.m. But if you look at the candles, it wasn't corresponding. So that's why I didn't make a move on it. So it wasn't until 6:57, which you can see was around the time that the crossover occurred here on the 5-minute candle. That's actually when I did decide to enter the trade itself. And you can see that it crossed over here, and on here it's also showing it trending down. So it was all in agreement, and that's the reason why I entered the trade. And then here's the silly mistake that I did. At around 8 o'clock, so about an hour into the trade, we had this big red candle here that brought it all the way down to 30,796. So that's, that's about 30, let's just to keep it even, let's 30 candles. And from that 30 candles, with the 4 contracts, we could have made $60 just from that. But I did something silly where I don't normally do this, but for some reason I did it, where I added more and I shorted more. It's like I was trying to follow the momentum going down. And this is in the evening during the Asian market, and there's really it was a silly move because, as you can tell, let me move this white vertical line here because you can't see how low that went. You can see it actually went all the way down to 30,771, and there was a bit of a rejection there. And it was just a bad move for me to be, shorting 2 more at 30,881. Because of that, it lowered my average. And then I just kept watching it without doing much to it. And before you know it, stock kept going up, and then I tried to average up. Then it kept going up some more, and another average up. And then before you know it, when the market opened here, like 6:30, it shot up so high that I panicked. And because I panicked, I just told myself, forget this, I'm going to change direction and I'm going to go long. And you can see here. And I did this based off of emotions. I wasn't doing it based on the rules I'm following. So I went long here at 7:05 in the morning. And again, I panicked again because this big candle here went all the way down and I was losing money. So I was like, no, I don't want to do this. I'm going to change direction again, and now I'm going to go short it. So I decided to short here, and guess what happens? It just keeps going up and up and up and up and up, and I held on overnight. And then finally, for that short, I was like, okay, no more of this. I'm going to take a loss. So I took a loss here. So for all of that, that's at least $1,000 of losses. And what's so silly about that is, and if I would have held on to shorts, which, using that language, shoulda, coulda, woulda, is actually kind of bad. But if I held on to it, I would have, made a lot of profit, because you saw today that today, Friday, January 22nd, it went down all the way to 30,780. So that contract that, I started at 30,830 here would have made me some money. But again, I just wanted to show you that even though I've been doing this for a while, there's times where your emotion kicks in and you do things that are irrational, and it's really a challenge right now that I'm still working on and trying to get better at. And that's the reason why I said there's a bit of an asterisk on how I traded, showing you these bad losses that I had here. And as I mentioned earlier, we actually got most of our money not from futures, but from equities trading. So before I switched to futures, in the past, I was trading stocks, penny stocks, anything, at least $1, of course, but from $1 to $5 itself. And I traded this one stock, which I'm going to show you the chart. So this is the penny stock that I actually traded post IPO, and this is the one where we earned most of our money today. But the reason I'm showing it to you was this is one of the reasons why I stopped trading penny stocks. I mean, anyone will tell you, yeah, don't trade penny stocks, but at that time I thought it was a good idea, and hey, I learned from it, and that's one of the main reasons that I'm trading the micro and the mini futures. So essentially, I bought a stock post IPO, and I'm hiding the ticker symbol here because I still have positions open on this. I don't want to affect anyone having to chase this stock. But essentially, this IPO'd in 2019, November 13th, 2019. And basically, I bought the stock on December 18th, 2019. So think about that. I've been holding a bag for this long. And what holding a bag means is essentially you have such an unrealized loss that you hold on to it, because once you sell, then it becomes realized, and that's when you officially lose your money. And basically, my average on this was about $1.73 or so. And you can see from here, I drew a white line of what my current average now, which is $1.61. But anyway, what was so frustrating about this stock is that, since the IPO, which had a high of $4.36, and me buying it at $1.76, I thought it was such a great idea. I mean, if you look at it, I didn't even notice that, a MACD occurred here, a MACD crossing, which, this is again a long time frame, so it's not something I would normally trust. But anyway, this stock was delisted from the NASDAQ. Okay, so you have, your stocks are either in the NASDAQ, the New York Stock Exchange, etc. And it was delisted and it was placed on the OTC. And usually that's where all the penny stocks are. And because of it, that stock that I bought at $1.73, it got as low as 7 cents. 7 cents around the May time frame. But I held on to it. And because of this, to day trade, you need a minimum of $25,000 of your account to circumvent the pattern day trader rule. And because of it, my balance actually went down, so I couldn't trade equities anymore. But anyway, I held on to it, and it was only recently that some moves has occurred. And then this week was the time where it actually passed my cost basis. Cost basis is the price that I bought it at, and because of that, I locked in some profits just to make sure. Hey, going down to losing almost 95% of your investment there and then getting it back, it's good to be able to lock that in, so you can have that peace of mind. Of course, I only locked in some. I'm letting a bit more run, and the reason for that is I do actually like the movement that's happening with this company, as far as what the CEO is doing, and a potential of the company going back to the NASDAQ itself. But I'll do my best to make sure it doesn't fall below this line again. It's something I actually kept watching, and if it goes up, great. If it doesn't, well, at least I'll lock in my profit, lock in what my initial investments were, and a little bit of profit. So that's the reason why for this week we had such a nice a gain for our account, and that's why I have an asterisk on it, because our focus is micro futures, and we actually did not earn as much with the micro futures to reach the $2,000, but instead we got that $2,000, the minimum $2,000 from equities that I was holding on for 13 to 14 months now. But anyway, that's how we did for this week. Hope you learned something. If you did, please subscribe, and if not, please give me another chance and an opportunity to be able to hopefully learn something from one of my content in future videos. If you were new to the channel and you're curious about what are the rules that we use to enter and exit a trade in a micro or e-mini futures, please check out the description below. Alright, I'll see you next time.